NIO of China continues to find strong demand for its luxury electric SUVs while expanding its electric car inventory and developing new EV batteries. However, the chip problem persists. Is NIO stock a good investment right now? Hey guys, welcome back to our channel. Today's video is very recent regarding NIO, the NIO, which is making some revolutionary movements in the electric car vehicle industry. But now the news is not very satisfying, so we'll discuss just that. Is something worse happening to NIO? When we talk about NIO, the first thing we hear is it's called the Tesla of China. On a more specific level, NIO is a Chinese global corporation created in 2014 by William Li. The company is headquartered in Shanghai and is a manufacturer of automobiles. It's a firm dedicated to the design and development of electric vehicles. NIO Inc. is also active in the FIA Formula E competition, albeit after selling Sheng Racing. The company has exited the funding team. NIO is also separated with NIO Life, the company's network for garment collection, NIO Services, which is the company's network of service centers, and NIO Power, which is the company's network for battery swap stations, Power Mobile, Power Home, and superchargers. NIO trails on key earnings and other fundamental indicators. It's a young, fast-growing business that's still trying to make a profit. The EV firm could debut a less expensive entry-level ET5 electric automobile at NIO Day on December 18th. It could also signal the launch of a new mass-market brand. According to the Deutsche Bank analyst Edison Yu, the next event will act as a stimulus for NIO shares. Here we discuss how it shows a downgraph. Unless NIO stock today wails as an institutional investor. They did not do so a few months ago, which is alarming because it's a strong indicator of institutional considerable money confidence in the air. And institutions are significant, therefore why is it declining and how much is it falling that we should be concerned about is what we'll investigate. So what's going on? Well, as you can see on the chart, there's a green line that's trending downwards. What does that mean? Well, the line represents the institutional ownership percentage, which is essential right now. Let me get the highlight up in what we shall call a lovely bright green, is its ownerships as of October 31st is 17%. Now, that's not terrific, but it's better than what it was at the start of the year when it was 20%. See, you say that's not fantastic, so that's a 2.5% drop, which is 12% or something in percentage terms, which is a significant decline from September with a loss of 18 from August. July to August, there was a more significant increase to here. There was a bit of an increase in that direction, then fell. Fell some more, we had a slight increase in June, we had a significant drop at the beginning of the year. People getting out of February highs and delivering increased into April massive drop into May again. That explains part of the enormous market reallocation. Everything about inflation remembers inflation was the ghost I was going to knuckle down and knuckle down and knuckle down. This is how the stock went. When coming to the analysis part, on a scale of A to worst E, NIO stock has an EPS rating of 44 out of 99 and an SMR rating of D. The profits per share EPS rating compares a company's earnings growth to other companies. Sales growth, profit margins, and return on equity are all factors in the SMR rating. NIO's third quarter loss was less than anticipated on November 10th. NIO lost 6 cents per share despite a 17% increase in revenue. However, the firm forecasted lower Q4 revenue than projected owing to ongoing chip shortages and production issues. According to FactSet, analysis predict NIO to cut its losses to 66 cents per share for the entire year of 2021, down from 73 cents in 2020. This year's revenue is expected to increase by 123%. NIO doubled its electric vehicle sales in the third quarter, while upstart Chinese rivals Li Auto and XPeng nearly tripled theirs. NIO's EV sales fell 27.5% in October, but Li Auto and XPeng continued to increase by triple digits year over year. According to NIO, sales were hammered by chip supply concerns and production modifications ahead of the launch of new electric vehicles in 2022. NIO is accelerating the launch of new electric vehicles in the face of fierce competition. In 2022, it plans to release 3 new items. Among them are the ET7, the company's first electric sedan and most technologically advanced vehicle to date. The ET7, which was presented at NIO Day, is expected to have a battery range of over 600 miles and fully automated driving. Will it be available in China in Q1 2022 and Europe by the end of 2022? According to FactSet, 19 analysis ranked NIO stock as a buy, 2 rates it as a hold, and 1 rated as a sell. Technical analysis of the NIO stock. NIO stock is still down 41% from its January high of 66.99 on the New York Stock Exchange. After a 7-week surge, NIO stock has retreated below the 200-day and now the 50-day lines. According to MarketSmith chart analysis, the store remains considerably low, a 55.23 buy mark from a cut base. China's data collecting crackdown has knocked on Chinese stocks, notably NIO. Electric vehicles that are becoming increasingly smart generate a lot of data. In addition, the corporation is up against increasing competition in the electric vehicle sector. NIO stock relative strength line is trailing. For the majority of 2020, it rallied strongly. A stock that has a rising RS line is outperforming the S&P 500 index. It's the blue line in the diagram. The stock receives a 47 out of 99 IBD composite rating. In a single score, the ranking includes critical fundamental and technical parameters. NIO has outperformed only 23% of all companies over the last year, according to its RS rating of 23. Over the past 13 weeks, NIO's accumulation distribution rating of C- suggests nearly equal purchasing and selling by large investors. 877 funds owned shares as of September. According to the IBD stock checkup tool, NIO stock has seen 0 quarters of increased fund ownership. Future of NIO. After more than doubling EV sales in 2020 and bouncing back from the verge of bankruptcy, NIO continues to boost its EV sales. According to NIO CEO William Li, fully electric and hybrid EVs would account for 90% of new car sales in China by 2030. That's up from around 10% in March, indicating plenty of possibility for expansion. NIO is extending its operations outside of China while expanding its capacity in China. In Norway, it sells the ES8. In 2022, it intends to market the forthcoming ET7 in Norway and Germany. BYD and XPeng, 2 Chinese competitors, are also present in Norway, with Li Auto seeking to expand into Europe. Chinese electric vehicle manufacturers, especially Tesla, are posing a threat to Western automakers on the continent. When coming to the question regarding is NIO a buy stock now, you should also check on that too. Fundamentally, NIO's financial economy started to recover after debt and liquidity concerns crushed the stock. It has drastically reduced losses while generating top-line solid growth. Expanded car selection entry into Europe and battery advances provide more room for expansion. The EV wars, on the other hand, are heating up. The chip supply shortage is a headwind for NIO in the short term. Battery availability could become an even more significant concern for EV stocks in the long run. NIO's RS line is weakening and the stock remains far below a 55.23 cup-shaped purchase point. However, it's a potential and high-growth EV stock, so stay tuned for further information. In conclusion, NIO stock is not a good investment right now. Expert opinion on NIO, Goldman Sachs upped their action to buy with a $56 price target. Options trading is a riskier asset than stock trading, but it has more considerable profit potential. Serious options traders mitigate this risk by educating themselves daily, scaling in and out of trades, using several indicators, and keeping a careful eye on the markets. Every investment in trading involves risks, so you should always perform your research before making decisions. We do not recommend investing money you cannot afford to lose. So guys, see you again soon. Don't forget to hit that like button and also to comment down your thoughts regarding NIO. Don't forget, share this with your friends.